if there are gold and silver bars in the gold and the silver ETFs, it would be a very easy move for the government just to seize them. They did this with Russian ETFs when Russia invaded Ukraine. Well, hello there, my friends. Rafi here from the Endgame Investor with this week's Silver Report for Arcadia Economics. And today I wanted to go into the subject of gold confiscation. I don't think there's going to be silver confiscation, but gold confiscation is possible, but not in the way that it was executed in the 1930s. I also wanted to go into a little bit of politics because there seems to be a lot of that going on with the federal government on the edge of a catastrophic default. About 2 to 4 weeks away, it seems. And at this very point, it seems that Biden is in trouble with possible sex slave payments being made under the table for his son, Hunter Biden. And so I ask myself, why are these revelations being made specifically now, with negotiations supposed to be heating up between the red team and the blue team on the debt ceiling? We have Yellen changing her language, now saying that a default of any meaningful period of time would be catastrophic, which seems to suggest that she thinks that a temporary default is possible. What happens to gold and silver in such a situation, and how the government could mobilize its gold reserves to buy another $500 billion of revenue space to stave off a debt ceiling default? The answer is simple. By marking the gold on the Fed's balance sheet to market. It is now valued at about $42.22, where it was marked in 1973 for the last time. But now, obviously, gold is worth about $2,040 an ounce. And what happens to gold and silver in the event that that is the move that the federal government tries to make in order to stave off a debt ceiling default? In other news, silver eagles are at their highest price. Physical silver eagles are at their highest price since 2011. And the Treasury's cash balance is now at $184 billion, which should last it for about 2 to 3 weeks if the current rate of decline continues. But let's get into it, shall we? This week's Silver Report is brought to you by Fortuna Silver Mines, symbol FSM. The latest news with them is that Fortuna has acquired Chesser Resources through a scheme implementation deed. What exactly that is, I'm not sure, but it's an acquisition. It's a West African acquisition. I'll read here in the second paragraph. The acquisition of Chesser will expand Fortuna's presence in West Africa to include the preliminary economic assessment stage Diamba Sud Gold Project in Senegal, one of the new and emerging gold discoveries in the region. This was acquired for about $89 million. Shows that Fortuna is still on the expansion path with a focus on West Africa. And one thing about West Africa is that in these days when we're all trying to flee big government and we're worried about confiscation and all these other rumors, wondering what's going to happen in a currency crisis, our government's going to nationalize mines, well, West Africa could be a very good place to be because the power of government there is very, very low. And yes, there are negatives to that, but there are also positives. You don't want to be in the jurisdiction of a country with a powerful government or a government that's used to a lot of power, because then they can get a little bit grabby. Whereas I think the chances of that happening in West Africa are fairly low because, well, they're kind of used to currency collapses because their monetary systems aren't so great after all. And so while West Africa can sound to the Western ear to be a little bit more dangerous than, say, Australia or the United States, I think in reality, it actually might be a little bit more safe. So with that, on with this week's Silver Report. We'll begin with the latest on the debt ceiling debacle. And this is a tweet from Breaking Market News, or Financial Juice, quoting Secretary of the Debt, Janet Yellen, who says, breaching the debt ceiling for a meaningful period of time could result in a very substantial downturn. Now, the change here is in the language meaningful period of time, which means that she might be saying that a temporary default of what she would define as a non-meaningful period of time, let's say a day or two, could possibly happen. And now that she's admitting that, she might not understand that even a day or two could trigger a lot of interest rate clauses, what would cause a global margin call on all Treasury-backed assets in the world, which is pretty much everything because the entire financial system is backed by U.S. Treasuries, which are much more plentiful than the actual dollar supply around the world. If we go down here to this table, where it says table 1 operating cash balance. This is the latest closing balance of the Treasury's account at the Federal Reserve. We see the closing balance is $185 billion, down from $215 billion. This is for May 9th, I believe. Last week, Treasury spent $108 billion and closed at $188 billion. So there's probably going to be a big drain of cash today or tomorrow or both. And we have about 2-3 weeks of cash left here. Here we have the chart for American Silver Eagles. You have in the blue line the price for physical Silver Eagles, which includes the premium on physical. And in the gray line beneath it, you have the spot price for silver on the COMEX. And so we see here at around $38.70, the price for an American Silver Eagle has not been this high since 2011, just after silver reached an all-time high of around $50. And so it might seem that by the spot price, things aren't moving so much, and it can be frustrating, but take a look at the price of actual physical silver, and it is moving higher steadily, consistently, and inexorably. Now let's move into a little bit of politics. From the Daily Mail, Biden family got $1 million from Romania while Joe vowed to clean up corruption. GOP influence peddling probe into $10 million in foreign cash reveals Hunter set up 15 companies after his dad became vice president and lay out how money came from China. Now, I'm not a politics guy so much. I don't really understand the chess game that's going on, but I do find it very suspicious and very interesting that this news is specifically coming out now, right when we're supposed to have intense discussions on the debt ceiling between the red team and the blue team. Why would they come out with this news now? We have to try to strong arm the Biden administration into spending cuts or whatever the red team wants. And if the blue team thinks that this is just insulting, they might play chicken with the red team far enough to trigger a temporary default. Now keep in mind that the deepest of the deep sewers of the monetary system, the real deep plumbing, rests on asset-backed overnight loans, and those assets are almost always treasuries. The overnight repo markets could explode on a temporary default, causing a cataclysmic tidal wave of defaults all the way down the chain if there is even one day of defaults on any series of treasury bills or bonds or notes. But before that happens, there are a lot of options the Treasury has. One of them is to mark gold to market. And how is that? Well, here's Jim Rickards, who I don't usually quote much, but here he offers a very interesting alternative for the Treasury, which could dramatically affect gold and silver prices. There's old Jim, and he says, weird gold trick could end debt ceiling showdown, at least for a while. Says Jim Rickards, still, there is an X date out there somewhere. He says, we don't know exactly where it is. I guess we'll figure it out on the day it happens, if it happens at all. Right now, the House of Representatives and the White House are playing a game of fiscal chicken.
What's the matter, Colonel Sanders? Chicken?
To see who blinks first. Maybe we'll find out the hard way when the bond market and the U.S. economy dive over a cliff. But it can all be avoided with just one simple phone call. How? One phone call from the Treasury to the Federal Reserve could replace the Treasury's gold from $42.22 per ounce, where it was marked in 1973. And by the way, that is proof that the gold standard, or at least the statutory gold standard, ended in 1973, not in 1971, when they tried to repeg gold to $42.22 an ounce instead of $35 an ounce. But that is a little historical piece of monetary trivia. If you look on the Fed's balance sheet, that is what the gold certificate account is pegged at. So anyway, $42.22 per ounce to a market level of $2,042 per ounce, which is around today's price. That would pull over $550 billion of new spending power out of thin air without issuing any debt. And he notes here a very interesting point. Historically, this was actually done by the Eisenhower administration in the 1950s under similar circumstances. This is also what is known as mobilizing gold reserves. Doesn't mean they're going to sell any. It just means that the Treasury calls up the Fed and says, look, mark my gold to market and give me the cash for the difference, because we gave you that gold certificate account at $42.22 an ounce, and now it's worth $2,040. So print us up some money, recognizing that difference and mark it up on your own balance sheet. And how long would that really last? Not that long, but it would greatly affect gold and silver prices because it would be another layer of admission from the government that gold is necessary in even the current fiat monetary system, which is not really fiat because gold is still money and there is no such thing as pure fiat. It would simply be another layer of lies being wiped off the slate and the truth revealing itself just a little bit more brightly. And now I wanted to talk a minute about gold confiscation. When things get real rough, what happens? What does the government take? How do they take it? And yes, they are kleptomaniacs, so they will steal what they can. I don't think they're going to steal silver. It is too bulky and it is not worth it for them. Silver is always the public's money. It is not bank money and it is not government money, at least not since 1873. So what will they do? I don't think they're going to come knocking on people's doors and taking their gold and silver stashes from their home. That, I think, is very impractical, requires way too much manpower and a lot of investigative work, and would really rile up the people and the public. It wouldn't go down very well. What they will do, I think, is look for the centers of big gold hoards and just take them. And what is the biggest target? Well, that would be the ETFs. If there are gold and silver bars in the gold and silver ETFs, it would be a very easy move for the government just to seize them. They did this with Russian ETFs when Russia invaded Ukraine. They just said, well, now the Russian ETFs that were invested in Russian securities, now they are worthless and we are confiscating them, and that's it. And everyone who was invested in them lost their money. That actually happened. Could that happen with gold and silver ETFs? Absolutely, it could. It happened with Russian ETFs, and it can happen with gold and silver ETFs. They can also go after mints, people who have allocated or unallocated accounts at national mints or mints that are associated with the central bank or a national government. Those can easily be confiscated and then fought in the courts later. And since courts will be paid by government fiat, or they get their salaries in that, they are interested parties, and I wouldn't count on them to rule in the public's favor. Remember how the courts upheld Roosevelt's pilfering of the entire gold supply in 1933, 1934. They will uphold all the pilfering this time as well. What I do not think they're going to do is nationalize mining companies like Fortuna. That's too much work. It doesn't make a lot of sense. And when there are huge gold hoards in the ETFs, why would they do that if it requires so much labor? This is Rafi, the Endgame Investor. If you enjoyed this video, then sign up for a 2-week free trial of the Endgame Investor. Where I do my best to keep my subscribers calm and collected and focused on the end game, because we're going to see a lot of crazy shenanigans until we get there. Or you can become my patron on Patreon, where I give a biblical commentary on these sorts of topics. And last week, we dealt with bribery causing blindness, both spiritually and literally. I'll see you guys next week.